The fact that it's being consolidated and held in a range like this isn't as helpful, because all that does is allow the crosses, for instance, like the euro pound and the Aussie New Zealand, those exotic pairs that are not coupled with dollar. When dollar's in consolidation like that, that's when those unrelated dollar-based forex pairs are permitted to move around freely, and they have exaggerated moves, and it's based on its interest rate differential. So the stronger will move better than the weaker, and the weaker will move softer than the stronger. When dollars in consolidation as a forex trader, you want to be thinking about, okay, then I need to look at the relationships between the interest rate. So the interest rates between the two currencies that make up a pair, if they're paired together, and they have to be a pair that's not with the dollar index. Since the central bank's holding dollar in consolidation, you have to take your attention away from the majors and look at the exotics, anything that doesn't have a dollar associated with the pair. And then whichever one's stronger versus the weakest, if you compare those two up, that's where the bigger moves are going to occur. Don't lose sight of whenever the market is doing this in dollar, if it's consolidating, your mind should be not trying to trade those dollar-based currencies, start looking at the exotic crosses.